Hi, I'm Sharon Tang and you're watching Evening Highlights. No respite for the ringgit as heavy foreign selling continues. The currency hit yet another fresh 70-year low, closing today at 4.4235 against the US dollar. According to MIDF Amanah Investment Bank, foreign investors offloaded 1.27 billion ringgit in the open market last week, despite it being a holiday-shortened week. It says this was the fifth week this year that the outflows had surpassed 1 billion ringgit, which more than reversed the amount of inflow recorded the week before. MIDF says that basically implies that any fund making its way to local equities is highly volatile. At the current level, the ringgit is a step closer to the all-time low of 4.7125 reached in January 1998, before the central bank pegged the ringgit in September the same year. Credit default swap or CDS traders may think that Malaysian bonds deserve junk status, but the Malaysian Economic Association says this is just a perception problem and that it doesn't reflect the nation's fundamentals.
The credit default swaps has in a way incorporated the current negative sentiments, that has increased the cost of hedging. But in terms of credit fundamentals, we currently still have a window of opportunity to address some of the so-called market concerns which have been expressed in this hedging market, this pricing in the credit default swaps.
He says the CDS traders' placement is based on the current pricing of Malaysia's sovereign debt.
The comments actually originated from the Moody's headquarters, principally because of the credit default swap market, which is actually based on what's the current market pricing of Malaysian sovereign debt. And that sovereign debt pricing has actually deteriorated, largely because investors have demanded a higher risk premium, which means that the cost of borrowing for Malaysian borrowers will rise because of the so-called the sharp increase in the yields of Malaysian so-called the default swaps.
Dr. Ye points out that three international ratings agencies, Moody's, Standard & Poor's and Fitch, have assigned a stable outlook to Malaysia, which he says is more important for investors in the country's bond market. He also foresees increasing volatility ahead for the ringgit in view of the impending interest rate hike by the US Federal Reserve sometime in December. Bank Negara Governor Tan Sri Dr. Zeti Akhtar Aziz doesn't think the junk status assessment is a big deal either. She says it's up to Malaysia to convince investors and counter the negative press. She also says the government is under no pressure to raise interest rates.
We are not facing any pressure. Our interest rates right now are described as being accommodative. That means it is supporting economic activity. And we are still seeing steady growth of credit. That means it has not hampered borrowing from the financial system to support businesses, especially for SMEs.
She says the outlook is challenging, but the country's growth will be in the region of 4 to 5%. Zeti was speaking after the launch of the Financial Literacy exhibition in the capital today. Saudi Arabia's ACWA Power says it is eyeing 1MDB's power assets, but it's not on the shortlisted bidders list. ACWA Power has confirmed that it was neither invited by 1MDB to make a final offer nor included in a short list of bidders. To the best of its knowledge, the company was responding to a recent media report that it had been shortlisted as one of the bidders to submit final offers for 1MDB's power plants. ACWA Power currently has presence in 12 countries in the Middle East, North Africa and Southern Africa and the Southeast Asia region. It has a portfolio of power generation and desalinated water production plants with an investment value in excess of $26 billion. And that brings Evening Highlights to a close. I'm Sharon Tang. Thanks for watching.